McGuire from XM joins us now in the studio. Take us through some of the commodity moves we're watching, particularly oil, which has been a big focus, I guess, to kick off the week. Peter, welcome to the show.
Good morning, Ingrid.
Ipek meeting over the weekend. Where's everyone standing? I mean, how do you read the situation there?
Well, first off, I think that there's we've got over the meeting, and it's more or less, taken on board what's happened over the last couple of months. It's really taken people by surprise. Traders' perspective, down to that massive sell-off to $38 negative. Now it's back at $38 positive. So that's a $76 swing in a matter of a month and a half. So the market is taking on board what's happening as far as consumption. Do we see a change of sentiment? And those unemployment numbers were astounding coming forward on Friday night. Big uptick, negative 8 million to plus 2.5 million. So is there a general consensus there that we're seeing a little bit of positive tone, and that may come across to the oil market a little bit further push to the upside?
Well, exactly. We're seeing that positivity when it comes to consumer, when it comes to some business, but when it comes to the oil, we're really relying on these various nations to honour the cuts that they've made. So when do you think we'll actually see whether or not this actually takes place?
That's the great question, Daniel, because compliance is the huge problem that OPEC and OPEC Plus have always had. Do all members participate and take on board the same message? And if they do, then there's going to be a lot of peace across the OPEC sector. But if they don't, and you get the wild cards in there and they don't play to the game, then that really is going to create a level of frustration, and then that leads us into the next meeting. And there are many moving parts. You've got Russia, you've got the Saudis, and of course President Trump. Election year, a lot of people to re-employ. So yeah, that's a very, very tough one.
So do you see a short-term dip in oil prices going forward then?
Well, I wouldn't be surprised. I think it's just had such a huge move. We're up around about 85% in the last 3 weeks. So that's a big move, Ingrid. And if we continue that up push, I think you're going to see, there's such a large chasm, I think, between Main Street and Wall Street. Yeah. So that it's all been baked in. There's plenty of good time mindset there, and I think the reality is yet to hit. So I wouldn't be surprised to see a little bit of a sell-off, profit taking, and that could be across all sectors. You've got to see what happens as far as Jerome Powell's message, what's happening as far as stimulus. It's all stimulus. It's a stimulus rally, and it's been extraordinary what they've been able to. The fabric of the whole situation is just extraordinary.
We're sitting right on the cusp of that pricing where some shale producers might be tempted to come back online. So that's just another element to really throw into the mix of the demand-supply conundrum here with oil.
Well, yeah, those guys, you're coming into that summer driving season. If we see a resume of participation from a consumption side, then you might see a larger appetite for those guys to really engage, see oil prices come up the curve a little bit. If they don't come up, Daniel, that's the issue, and I think you're probably going to hold at these sort of levels. Many analysts are saying you've seen that dollar sell-off, big sell-off as far as US dollar over the last matter of weeks, and where does that really drive? There's so much uncertainty, hard to put press a button and say there's the answer. I really can't forecast what's going on. These are extraordinary times, as we know.
It's interesting because when you flip over to gold, which we're watching closely, particularly the Fed meeting tonight.
Back at 17.20.
Yeah, exactly. How much further can that one run?
Well, we were at 17.50 only a couple of days ago. We were at 16.95 only 24 hours ago. So I think that there's possibly more momentum. That US dollar continues sell-off, the uncertainty factor. There's profit taking, margin calls, what traders are doing as far as opportunity, and where that risk comes on or off the market. So everyone's been, piling in, including all the big hedge funds. They've had extraordinary returns over the last couple of months with the Dow and S&P and equities. So maybe there's a time of a hiatus, and they may look at jumping on the gold wagon. I think there's upside.
That is really, in context, a 3% window for gold compared to, say, the 20+% window we've seen for equities. Do you think some of the dollar weakness recently has been a cushion for that gold price?
Yeah, definitely. That dollar, I think there's further downside for that. We've been calling it down. It's been extraordinary over the last couple of weeks where it's really traded to. Back at 96.3 for the US dollar index, and there's every chance you may hit that 95.50 handle. So I think the momentum pushing it down, traders are mindful of it. Let's see what happens tonight as far as Jerome Powell. That's going to be the real big overarching number of where we'll look this week.
But a market's already expecting a sort of dovish tone, I guess, from Jerome Powell. What do you think?
Definitely. I mean, it's been dovish all the way through.
So what do we need to see tonight in order to get a move in any of these
If he makes any comment, I think everything else is very transparent. I think there's only one number, and that is, what was his mindset on those unemployment numbers? numbers. If he really comes out and says, this has really taken us by surprise, we're expecting 8 million negative as far as people lining up for dole queues, and we've got 2.5 million positive. Is the US economy turning? Is the global economy turning? The ones that aren't getting that second wave or getting the major wave that we've got at the moment, like the South Americas, and if they come up the curve, but there's the uncertainty. You've got riots, you've got, mass issues across the states, and many states in America are really feeling the brunt of this.
Because we did see Australia basically come on the record saying we're really surprised. We thought it would be a 10% unemployment. That's now going to be closer to 8%. And that seemed to give a bit of strength to the markets. Do you think that exact same paradigm might actually take place in the US?
I think so, very much so. And I feel as though that'll be the start. If we get those positive tones from Jerome Powell, then that in turn will create a little bit more buoyancy to the market. In a lot of ways, it comes down to earnings, projected earnings. You've got record low interest rates, so PE ratios change and all of that. You're borrowing money for cheap. Cheap.
One data point, though, I'm not sure he'll make a mention of it.
I don't think he will either, but you never know.
Watch
a wild
this space.
card.
And we know he moves markets significantly.
Absolutely.
We're also getting updated projections from the Fed, so it'll be interesting to see. Pete McGuire, always a pleasure to have you on the show. Thanks for joining us in the studio.
Lovely to be here. Thank you, Ingrid. Thank you, Daniel.